Hey everyone, hope you're all doing well. If you're new to the channel, please consider subscribing. I'm going to keep dropping tutorials and stock reviews, and you want to be sure you don't miss out on anything. So we're now in video 2 of the How to Value Stock series, but the last video was more high level. This is really going to be the first video where we're going to start learning the fundamentals of stock valuation and digging in. So the first step to understanding how to value stocks is understanding the 3 financial statements. If you aren't familiar with financial statements, don't worry. By the end of this video, you'll have a high-level understanding and be on your way to becoming an expert. So there are 3 core financial statements that every company has and releases to the public. There's the income statement, balance sheet, and cash flow statement. So the income statement shows how much money a company made and spent over a period of time. There are 3 main components to the income statement. First, we have revenue, which is the total amount of money a company's brought in from its sale of products or services. And then we have costs and expenses, which includes all the company's expenses, which can range from salaries, research costs, cost to manufacture the actual products, and taxes. And then lastly, we have net income, or the company's profit, right? This is a pretty simple calculation, just the company's total revenue minus their expenses. And now let's move on to the balance sheet. This is the second of our 3 financial statements. So the balance sheet shows what a company owns and what it owes at a fixed period in time. What it owns are called assets, and what it owes are called liabilities. Some examples of assets are buildings, factories, inventory, equipment and machinery, cash, and a variety of other items. Liabilities are just the company's debt. This could be money borrowed from a bank to launch a new product or money owed to suppliers for materials. And then lastly, we have shareholders' equity, which is sometimes called capital or net worth. And this is the money that'd be left over if a company sold all of its assets and paid off all of its liabilities. This leftover money belongs to the shareholders or the owners of the company, hence shareholders' equity. This is the shareholders' claim of what's left over. Now, for you personally, if you subtract all that you own, your assets, minus all that you owe, your liabilities, that's your net worth. And for companies, this is just called shareholders' equity. And the last of the 3 financial statements is the cash flow statement. This shows a company's inflows and outflows of cash. While an income statement can tell you whether a company made a profit, a cash flow statement can tell you how much cash the company generated. You may be thinking, shouldn't the profit be the same thing as the cash generated? The simple answer is no. There are a few reasons for this, but I promise we'll get into that in later videos. But for now, just know that most of the time, profit or net income is not the same as the cash generated. There are 3 sections on the cash flow statement. The first is operating activities, which includes cash from core business activities. So in other words, it reflects how much cash is generated from a company's core products or services. And the next section is investing activities. This includes any sources and uses of cash from a company's investments. For example, the cash from the sale of a building, which is an asset as we discussed before, would be classified as an investing activity. Cash from financing activities, the last one, includes cash from investors or banks, as well as the uses of cash paid to shareholders. This would be the cash received from a company issuing new shares or the cash a company spends when it pays dividends. Now, this next concept we'll explore in greater depth in a later video, but it's important to know that the 3 financial statements are interrelated and dependent on one another. So let's just think about it at a high level for a second. Right, so the net income or profit from the income statement certainly affects how much cash the company generates. And then the cost and number of goods sold reflected on the income statement will affect the inventory on the balance sheet. And these dependencies and changes are the basis of accounting. But don't worry about that for now. As I said earlier, we'll get into that later. But just know that all the 3 financial statements are related. So why we need to look at financial statements. Imagine you're the owner of a company. Imagine you fully own this company. What are some things you'd want to know? Are we profitable? Are we making more money than the year before? What are we spending that money on? And when you buy stock of a company, you become an owner. So all these questions an owner asks should be the same questions you're asking. And the answers lie in the financial statements. Ultimately, when you're trying to value a company, it's crucial you understand the financial statements because your analysis will include predicting how accounts on these statements will change in the future. Then we will want to start looking at key ratios and metrics. These values are derived from the figures on financial statements. If you're familiar with investing, you've probably heard of the P ratio, which uses EPS, which is just a variation of net income, which we saw it comes from the financial statements. So any valuation measure you want to use starts from and is based on the financial statements. So it's really crucial you understand them. And there are a lot of sources you can find these financial statements. Pretty much any finance website or on a company's investor relations page or IR page. And you can find it under the SEC filing section. But today we're going to be looking at Yahoo Finance as an example to close out the video. So give me a second here as I log on to Yahoo Finance. Okay, so now I'm just on Google and we're just going to quickly go on Yahoo Finance and click on the first link. And then, so we're just going to be looking at a basic example of financial statements. So like I said earlier, any company will have these. But for this example, we'll just go with Amazon. Wait for it to load up. We're going to be using Yahoo Finance a lot through this series, so might as well get familiar with it now. So we got Amazon, ticker symbol AMZN. It's going to take you to this page. We have some key statistics here. Let's not worry about that for now. But now let's move over to financials. And every company will have this same layout on Yahoo Finance, and it's always going to be under financials. So we're going to click there. And that brings us to this page. And if you look up top here, we have the income statement, balance sheet, and cash flow statement. And those are the three we discussed. So I wasn't lying, they're here. Every company's got them. And so if we just look at the income statement quickly, we have annual and quarterly, but we're just going to look at annual for now. We have, right? This would be there for their trailing 12 months, TTM, 2019, 2018, and so on. And we have our revenue, as we said. We got our operating expenses, which includes our costs, and also our cost of revenue, which is the cost of the products. And then down here, we have net income. And then let's move over to the balance sheet. And we have assets, liabilities, and then equity or shareholders' equity, as we discussed in the video. And we have those three here, and you can always open them up and take a look in deeper depth of what it is. And we see we have cash here, inventory and current assets, and we'll get it all in. We'll get into that in a later video, but for now we're just taking a quick look. And then let's move over to cash flow and operating, investing, and financing. And then, yeah, so everything we discussed in the video, the big components of these three financial statements, they're all here. You can look into them in depth, and we'll get into how to do that in a future video. But for now, I just wanted to show you guys where you could find it. You take a look yourself, mess around with it. But that's all for this one, guys. Thanks for watching. If you enjoyed the video, please drop a like. It'll really help out the channel and help me out. And I'll see you next time.